The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and you have markets this morning. And a little bit of chop in the overnight session. We're negative by single digits, off by 3 points in the S&Ps at 69.51. NASDAQ, we're negative by 30 points, 25,709. The Dow off by single digits, negative by 8, 48,741. And the Russell's flat this morning at 25.37. Bitcoin slightly in the green. Quite the volatile session yesterday. Bitcoin up by $780, 88,340. And we're going to get to metals. Crude, quite a pop from that Friday low, continuing higher, pushing near the highs of Friday. 58.37. Crude up another 29 pennies. And metals catching a little bit of a bounce. Now, just like everything doesn't go up forever, doesn't go down forever. Quite the decline in metals yesterday. You're catching a little bit of a bounce today. You got gold up by $58, up by 1.4%. Now we'll see if we can get some volume going on that move today because, boy, whether it was gold, silver, no matter what metal you were looking at yesterday, we had some selling, man. Gold contract does 307,000 contracts. The most volume since we've done in the pullback in November. And going back to that acceleration to the highs of October. So we'll see what the volume comes in today. It'll be very hard to match some of the volume of yesterday, especially in silver. You look at that number, 248,000 contracts on silver. Now to put that in context, that's your weekly bar of silver, and that was one day. Right? That's your weekly bar on the pullback of silver yesterday, 325,000 contracts. Okay? It's not even Tuesday morning's opening bell yet, and you can see that that's more volume than silver does on most weeks in one day. And when you put it back to the daily, yeah, that's the most volume this year, and it's probably the most going back. Let's see if my daily, I think I got do I have a daily that goes back? I'll set it up. I got to set my daily back to go back. Let's do it right now. Like 5 years. We'll do a 5-year daily. I'll do it during the break to see the type of volume. That's a big number, man. We're bouncing today, and you got some nice volume. For only 9 o'clock in the morning, 76,000 contracts on silver. We'll see how the day goes. Silver up by $5 and 54 make it cents, up 7.9%. And yeah, what's going on here is that basically silver closes yesterday at the tick low almost, right? You're up by $5.50. So the closing session was what, $7.70, somewhere around here was the closing number. You drift higher overnight. We're right back into this first acceleration lower at about 2 o'clock in the morning on Monday. And then that's really where the slide began yesterday, right? Right back to where we were at 8 in the morning yesterday. Be careful on silver, folks. Volatility is going to be here for some time in the metals. Which is why I say put those stops in, take those stops. You see the action today. We're going to have plenty of opportunities in this metals market coming into 2026. Platinum. Boy, quite a day for platinum yesterday. From 25.84 down to a 2,000 and change handle. Talking about $500 decline in platinum in one day. $500 decline in platinum in one day. Folks, this metal was just trading at $800 in April. The thing moved $500 from high to low yesterday. Now, you're catching a bid today. Huge volume on the daily yesterday in platinum as well. We'll see what kind of volume we got on the bounce today. But pretty similar to silver, as in you pull up the weekly, and weekly volume just mammoth early on. All right, we jump to yields this morning. We're negative by about 4 ticks right now. The 10-year trading at about 4.12%. Okay, 10-year 4.12. You jump over the dollar right now, continuing to chop around 98. We just had a 97 handle overnight. 97.95 about the lows. We're back above that area to 98.11 right now. All right, we jump around to some of the stories this morning. Let's talk a little banks. Okay. So with deregulation in focus, boy, this is going to be pretty intense if we start having activist investor campaigns for the U.S. banks to ratchet things up. I mean, we're almost approaching 20 years of the banking crisis. And how quickly we forget. It's amazing when you look at some of the charts of some of these banks. And yes, some of these accelerations recently have to do with the fact that deregulation might be in play. But you look at these charts, man, no matter how far back you go, right? You got the financial crisis, okay? You got the steep rise with a little bit of volatility in between. But really, over the long haul, and then this recent run from the October of 2023 lows, more than doubling in price, that's Bank of America. Citi, not quite that same run, right? They really got clobbered in the financial crisis, but they've come back well. And boy, it's been a run since October of 2023. You got Citibank almost tripling in price. Bank of America doubling in price. Wells Fargo, the reins are off them to start increasing their assets. You trade from about $40 to $100. Nonetheless, emboldened activist investors are circling U.S. banks. The deregulation push could give activist investors more room to target banks where big campaigns are rare. But that may change. Comerica, unknown hedge fund, okay? A relative unknown, pushed Comerica to sell itself this summer, pressuring them to strike the biggest bank deal of 2025. Okay? Its battle with the bank turned into an all-out war. You're going to vote against Fifth Third Bancorp and their acquisition, saying it wasn't the best option. Okay? And the basic premise here is that, guess what? We might be getting some bank deals coming. Yeah. Bank deals have started to rebound as all but the biggest players struggle under the weight of regulatory, technological, and other costs, lenders, and contending with the new threats. And yeah, you're looking at potentially that number being as high as almost $50 billion and going up from there. So banks are getting ready. They're reviewing bylaws. They're getting ready for the assault. Pretty remarkable. Lenders often have a special status as stewards of deposits, often with unique ties to customers, shareholders, and the government. At smaller banks, for example, boards and management teams are often made up of local community leaders, and that makes it especially difficult to wage those campaigns. But nonetheless, it's on. All right, we talked about some of the home builders yesterday. Quite the pullback. Okay, you check out Lennar. We're going to talk about some home builders again today. Why not? We'll talk about some housing. We'll tease this one. So, Los Angeles. We'll tease this one as we come back. Tightens rent controls for the first time in 4 decades. Landlords of most multifamily apartments can only raise rents 1 to 4% a year, down from 3 to 8%. Dating back 40 years. Folks, that's a tough one. We're going to talk about that, rent limits, and how could have the negative impact that they're looking for affordable housing. All right, folks, S&P's chopping around December 30th. 2 days left. We got a full day of trading tomorrow as well. We'll come right back, folks.
For potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're talking home builders, and yeah, so LA and these rent controls, man, it always gets political, but this one, it merges lines, okay? It does merge lines. I think everybody wants to do something to allow people who can't afford a home the ability to afford a home. But when inflation is up and rising in focus, okay, people are trying to do it, and one of the things that keeps coming up, of course, is rent controls. Gets a lot of attention, of course, in New York because of those numbers, but LA tightens rent controls for the first time in 4 decades. As I mentioned coming into that break, new limits up to 4% a year. Now, it's always the details, of course, okay, and the details of this one is that it's apartment buildings that were built in 1970 or prior, being built after the late 1970s, okay? These city rules do not apply to any single-family homes or apartments built after the late 1970s when an earlier version of the rent limits first took effect. They say, oh, okay, that's just grandfathered. Well, no matter what, it's still going to depress the building nature and the who wants to build when you say, okay, well, if you build a new unit, right, well, why are you so worried, man? You know, we're not going to depress building multi-unit apartments because they are exempt, right? The rules only apply to multi-family apartment buildings, or would it be built after the 1970s? Don't apply to apartments built after the 1970s. But here's the problem. You build a multi-unit family property right now, and who are you competing with rent against? Now you're competing with rent against 651,000 apartments that can't go up. So what do you think your rent's going to do, right? Why are people going to rent your apartment at a market rate if there's an apartment right down the street in a nice apartment building built in the late 1970s that's renting Look at these numbers. Rent stabilized apartments, 1,800 versus 2,700. Whew, man. Now, these LA rent controls, okay, would reset when somebody moves out. Nobody's ever going to move out, right? We see how this happens, okay? And folks, as somebody that's in real estate, okay, as somebody that builds multi-family units, okay? And St. Pete's done a tremendous job of opening up for accessory dwelling units, okay? There's many areas in St. Petersburg that you can develop, and what usually happens is you get bonuses, okay? There's certain things that you can do with your land, and if you develop that land, and whether you're renting out apartments or you're building affordable housing, they allow you to do greater things with that land, right? Maybe you have a density bonus that instead of putting 4 units on your one lot, now you can put 8 units on your lot, right? Exaggerations, all that stuff, okay? The last part that never makes any sense to me in this conversation is that this is a subsidy for people who can't afford housing. I got no problem with that, man. Okay, I got no problem with subsidies for people who can't afford houses. The thing that always makes no sense is why one certain aspect of the economy, as in people who own multi-family apartment buildings, are somehow now on the hook to subsidize that. The government could subsidize it themselves. You got to have market rents, okay? The only way is to incentivize the building, not disincentivize the building. Now, you have a couple examples in here. Okay. And this is the Journal. And the Journal says economists have long argued that rent controls tend to deter investment and over the long run lead to chronic supply. I would argue that that's more fact than an argument. Okay. I would love the argument for somebody to tell me that rent controls somehow don't deter investment and lead to chronic supply. I mean, somebody make the argument, right? Make the argument that rent controls don't deter investment and over the long run do not lead to undersupply. I mean, make the investment that rent controls spur investment and increase supply. I don't know. I mean, imagine an assignment that you have to say that rent controls are going to spur investment and are going to lead to developers to build more supply. You'd laugh at that, right? I would. And it's an opinion. I get it. Okay. LA, they got city officials that are doing it. Now, in Minnesota, getting a lot of press recently for government funding and where that government funding is going. But nonetheless, Minnesota's Twin Cities became a central case in the rent control debate in 2022. Okay, St. Paul enacted one of the most restrictive rent controls in the country, did not exempt new construction. Bonkers. Who's going to build new construction if it's not even exempted? Multifamily permits soon plummeted. Yeah, of course they did. Okay, and guess what? It's even more pronounced when right next door you can do it in the same way, and they aren't rent controlled. Minnesota, no rent control? Yeah, everyone said, no, I'm not going to do that. I'll just buy a lot. I'm sure pieces of land went way up in Minneapolis. It spurred investment, and then all of a sudden, what do you got? You got more housing in Minneapolis versus in St. Paul, okay? And now what's going on in the state capital is going to loosen its rent laws. Massachusetts Governor Maura Healey, she's a Democrat, said on local radio last week she's going to vote against the planned rent control ballot measure for fear it would hurt housing production in her state. So, it crosses party lines here. And I think everybody wants to get affordable housing, but rent controls, folks, if you want to subsidize affordable living, do it through taxes and government assistance. It makes no sense to just cap how much people can make when they're in one facet of the government. It always makes no sense why people who own multi-unit properties would somehow get smashed with that. It just makes no sense, and I don't understand it. And hopefully they wisen up because, being in St. Pete, being around it, going through the regulatory nature of everything now, and seeing the bonuses that play out, I can't imagine ever wanting to build a multi-unit family property, folks, if there was rent control. Why would you? You would go do it somewhere else, okay? In real estate, what's remarkable is the more you get into real estate, folks, the more you realize, okay, you can be a developer anywhere in the country from anywhere in the country, okay? There are many, many, many LLCs from all over the country that are doing business in St. Petersburg, Florida, right? Pinellas County, Hillsborough County, all over Florida, all over the country. So don't just think like developers in LA, well, where else are they going to go? And, I'm kind of harping here, but, you see these numbers, 1% to 4% a year is what you're going to be able to go up on rents. Inflation, period, right? But just talking about insurance and taxes alone, okay? Let alone mortgage costs, the cost of debt, right? We have inflation that's rising right now. So that's a tough one. And what we're going to do is we're going to talk. It's great. It's the holidays, man. We got a little extra time, right? We got the S&Ps right now down just 4 points, okay? And what we'll do is I'm going to talk about a little bit of some of what they do in Florida, okay? There's a great app called Live Local, all right? If you're a developer in Florida and you want to take advantage of some great programs, look up Florida's Live Local Act and what you can do for certain areas in the state. We'll talk a little bit about that and maybe some of those areas that you can expand affordable housing beyond
Sharpening
rent controls,
your
which
skills
do
as
the
an
opposite.
investor
We're
is
coming
like
right back,
getting
folks.
better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps negative by 2 right now. Markets slightly in the red. The Russell up by 1. You got Bitcoin up by $800. You got crude up by 30 pennies. Crude trying to break out of that channel line to the upside. 58.41 and the price of crude, and gold and metals catching a bid. Gold up by $60 right now. Silver up by 7.5%, up $5.34. So Live Local, folks, if you were in Florida, okay, what Live Local is, okay, is that Live Local, it's the Live Local Act, I believe. Let's see. Yeah, Live Local Act. Okay. Now, if you're in housing or development, folks, listen to this. Okay. What this does. Okay. Now, I was trying to get the best. This is Live Local. Okay. And what it does essentially is that it allows. Let me get the exact summation here. Here we go. I'll give you a little AI summation, but this is the deal here, okay? And what this focuses on is that this is a statewide act, okay? Now, when I was Googling this, Hillsborough County 6 days ago is coming out to sue, saying that they've lost. Here's the news on this one, okay? And they've lost control because they have. Wait till you see what this thing lets you do, folks, okay? Hillsborough County votes to challenge Florida's Live Local Act, citing loss of control. And they're right to cite that because the counties have no control whatsoever if you abide by these rules, okay? It's kind of like building something in your neighborhood you had no say. A real estate appraiser has been tracking Live Local in unincorporated parts of the county. Under the law, developers can move projects forward if they include a set number of affordable units. Okay? This is the type of development, folks, in my opinion. Now, city planners are going to go crazy because they have no control. Right? City planners like St. Pete, they got great city planners, man. They do a great job, right? Everything's structured in a certain way. It makes the city look very beautiful, the way they structure it, certain regulations, what can be built where, etc. Well, that just got upended remarkably, okay? The law is wreaking havoc across 700 square miles of unincorporated land, warning it could result in what he calls an overwhelming number of near automatic approvals, okay? Now, what this law does, or this act does, local governments must approve developments in commercial or industrial zones or mixed-use zones. Now, in St. Petersburg, okay, there's huge areas of whether it's warehouse districts, okay, and there's a lot of cities that have underdeveloped areas like mixed-use areas, okay, with whether it's warehouse, mixed-use, whatever it is, it's underused, especially when it comes to housing. 40% of the units must be affordable for 30 years. But here's the kicker on this bill, on this act, okay? Affordable for Live Local only means that households have to be at or below 100%, 120% of the area median income. Now, sometimes to get density bonuses and so forth, you need to have units that are able to be serviced for people living at 60 or 80%. I forget the exact number, okay? But usually to get some of the density bonuses, you have to be at like 60% of the median income in terms of what you're going to rent those units for, really affordable units for people who really can't afford rent, period, right? Now, watch this though, okay? Because this number that you can do, and so if you abide by all of these, stay with me because this one's remarkable. If you abide by all of this, okay, then what you can do is that you can build the max density and height limited by the tallest nearby development. Now, folks, in St. Petersburg, Florida, okay, there are so many mixed-use areas, whether you're on First Ave South, okay, whether you're on Central, all these areas that are not just residential areas, okay? So you got to go think anywhere, whether I just talked about the industrial areas, the warehouse areas, okay, and then anywhere where it's mixed use. Now, in St. Petersburg, that, when you're in busy areas, busy streets, a lot of times like Central Ave or First Ave South in St. Petersburg, if you're familiar, and probably in many cities around Florida, right? You have Central Ave. That's a lot of stores, storefronts, commercial. But what'll happen is the one street away from it, like in St. Petersburg, First Ave South, First Ave North, that's mixed use. They want to have basically ground floor commercial and maybe apartments that go up. And then as you transition, you go to single family neighborhoods. Okay, that's kind of the city. Well, guess what? In St. Petersburg, we got 20-story high rises everywhere. So all of a sudden, you go from owning a piece of land that might be able to go up 36 feet, okay? First Ave South. I got a lot for sale right now in First Ave South. You can go up 36 feet, I believe, okay? So basically 3 stories is the building height that is required by code. Folks, if you put 40% of the units affordable at 100% of median income, okay, annual median income, and I'm going to get the number. I'll get it after. It's a huge number what you can rent these out. Yeah, so if for 2025, right, check this out. This is what's bonkers because you can just do big time business here. And this is the stuff that'll spur it. For 2025 in Pinellas County, 120% of the area median income allows for a maximum annual incomes of $88,000 for one person and a six-figure income for two people. Now, when they calculate this out, you're paying around 30% of your income. So if you're renting a two-bedroom, a two-person household, it's like $2,500 a month. So imagine you buy the land, okay, you go to Live Local, and you put in, and what's cool here is, okay, is that, and I'll share this link, like this is in Pinellas County, okay, they have their own dashboard for Live Local, and you can actually look up, I'll put it up, you can look up specific products that are accessing this act. Okay, total units proposed using this act 3.4 thousand. Affordable, right at about 40%, right? You can zoom in and see where some of these projects are taking place. You click on it, it'll show you. Okay, 40% affordable. Total units, 304. Yeah. So you build a building. You can go up as high as you want. It's remarkable. And this is why local leaders are flipping out. Because imagine you have an area near the city where you've regulated that local community developers just want to have nice 3-story mixed-use townhomes, something like that, right? All of a sudden, folks, I'm going to finish this one up on the other side of this break. Okay, these certain areas, now listen, if you want land in warehouse districts, and the real key is you ever get a block of land, like a warehouse district block right now, in some areas of St. Pete, it's worth so much more than people realize, because the coolest part about this is you have to keep 40% of the units affordable for 30 years. That only means 120% of AMI, which I just showed you is like $2,500 a month. But the coolest part about it is the other 60% of the units, you can do whatever you want. So you could build a 20-story high-rise, right? And you could have 60% of the floors be luxury high-end apartments on the water, and the other 40% you rent out for $2,500, and you can sell the other 60% if you want. You know, that's the type of stuff that gets building going, folks, not rent limits. We're coming right back and talking some equity. Stay tuned, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P off by 6 right now, NASDAQ off by 43. And just one more to talk about when you're talking about the Live Local Act, folks. It blew me away when I first got into the weeds of this act. It's some powerful stuff, and people are going to start you're going to start, if you're in Florida, okay, you're going to start hearing more about it, because what is going to happen is we're so used to the regulations that keep everything so cohesive, right? And all of a sudden, you can build, I think it's within a mile, okay? So imagine, a mile is a long way when you talk about zoning. So you own any lot, you can build as high as any building within a mile or a mile and a half, I think it is, from where you are, which basically means that many areas that are underdeveloped, you're going to be able to build. And like, this is one example. Okay, now this is an article from, I think, last year. When this one? Yeah, no, June. Okay, 381 units of Live Local Act. Now, you can get tax benefits in here as well if you build a certain amount. But yeah, this is one in St. Petersburg, North St. Pete, 381 units. They're using this act, okay? And yeah, they're going to have 40% of those units at 120% of median income. 70% of the units in this building are going to be studios or one-bedrooms. 267. 104 are going to feature two bedrooms. So this is how you do it, okay? And what's really cool in here is that you only have to keep the 40% for 30 years. But if you're developing a big project, what you could do is you subsidize the debt, right? You service the debt by building it out, and then you can sell off the 60% of the units that are not part of the 40% that are in AMI, and then you keep the 40% as part of those, earning up to 120%. And the coolest part about this is 120% of AMI is not that low of a number, especially when you're talking about the rapid advancement it gives you for how high you can build. I mean, what happens is you can get a city block, folks, and you get a city block and you can build a building that's 20 stories high. And that just doesn't happen on many areas of land. And you can do it across the entire state. Now, warehouse areas are really benefiting and mixed use. So, if you know St. Petersburg, any area where you're talking about mixed use, right, where you can have commercial on the first floor and apartments above. Now, folks, there's so many areas in St. Pete where it's still a 3-story maximum, all right, where you're talking about, I can pull it up. But there's many areas that even if it's mixed use, you're looking at 3 stories, 4 stories maybe, okay? You don't put, but one of the news articles that I read in particular, okay, whether it's county commissioners, right, city elect selectmen, saying people are not ready for the type of buildings that are about to come in their neighborhood. You're going to have single-family homes that abut 20-story high-rises. But guess what? that's probably going to help affordable living. And it's not coming to single-family neighborhoods, okay, because you're going to hear this is going to be an uproar. Not coming to single-family neighborhoods, okay? What it's coming to is mixed-use development and warehouse. That's the key, okay? Yeah, and that's the one that I was just talking about is mixed use. And then in the warehouse, and they got a great warehouse district in St. Pete that is going to boom, man. And that area in particular, it's just shocking what you can do, because so often people shy away from affordable housing when they're building because it's tough. You know, if you're going into really some of the high density bonuses where you're going to come in at 60% of the AMI, the area median income, that's a tough problem, okay? Like, for instance, on some of these limits, now this is another article here, it's not a problem, but it's just a very low number. That if you're building that many units at that low of a number, it's a low rent number, okay? This one talks about 53 homes on one parcel is going to be less than 50% of the area AMI. That's people earning $33,000 from one person. Okay, you're not going to get a lot of rent if you have to service people like that. Then you got 60% at 80%, and then you have 144 remaining units at 120%. Well, I just went over. Okay, if you're selling somebody a 2-person unit, they're earning 6 figures. And that's only 40% of the development. Imagine, the only rule of this is that you have to have 40% of the units in your building rented out for 30 years to people that make $100,000 a year. That's it. It's a remarkable number, man, and it's a much better way, in my opinion, and that catches flack big time. Of course it does, because there are going to be many people in those areas that are going to have their mind blown. You got county commissioners out here really trying to almost inform people of what's about to happen, because they're going to be so surprised when it eventually hits, and they got high rises all over the place. I should almost do a whole show on that one again, man. Now, you know, when they just updated it, because like any law, there was some ambiguity. They weren't exactly sure. So June of this year, they strengthened that exemption, okay? The term commercial property, because they were a little unsure. Said, commercial property, is this like a warehouse? What if it's a planned unit development? What do they say? No, they're all eligible, okay? Strip malls, all of that stuff. Churches, why not? Churches and religious institutions, you can do it as well. Go build a 20-story high-rise, okay? Yeah. The law explicitly overrides local height, density, and floor area ratio limits, unless the city adopted its own affordability-focused standards before this law took place, which is not the case in many situations. And the fast-track approval projects that meet the plans and regulations are approved by staff. No public input. No public input. There's a few carve-outs. Historic buildings listed on the national local registries may be subject to aesthetic rules, but only if those rules don't reduce size or scale. So, you know, it's on, man. And keep that, you know, you look for that. Go look it up, folks. If you're a developer at all, Live Local Florida. Remarkable act in Florida, especially if you want to build multi-unit families. That's the thing. This is something that really, it's something for high-rise builders, okay? Because you're going to be able to go buy land that only used to be able to go up like 3 stories and put in, you know, maybe it has a density of, 8 units or something like that. Maybe you can go up 3 stories high and you can build 8 units. Well, what happens is that you go through this act and all of a sudden you go from owning a piece of land that you can go up 3 stories high and maybe put 6 apartments on to a piece of land that you can theoretically, now you need more than 1 lot to make sense to build so high, but you ever get like a full strip of 1 block, right? You get 6, 8 lots of land all together. You can build a 20-story high-rise on a piece of land that used to be capped out at 3 stories, all because of this Live Local Florida, folks. Check it out. And you don't have to be a developer that's going to build a 20-story building out there. Just the land alone, okay? Developers, they're going to eat this stuff up, man. And they should. This is what's going to bring multi-unit, big high-rises to cities that need it. And you're only talking about warehouse, industrial, and mixed use. All right, we'll come back and talk some equities, folks. Stay tuned. We'll come right back. S&P's up by 1.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Sorry for that, folks. Not sure how that happened. I'm sitting here, I'm talking about the heat map. You can't hear me, you can't see me. We got the S&P 100 up here. Only a few equities in the green. Meta, one of them, up by 1.4. UNH up by 2%. Boeing up by 1.6 as well. You jump over the NASDAQ. Yeah, Intel up by 1.6. Marvel up by 1.9. NVIDIA, slightly in the red. Apple as well. Markets just chopping around. Now, remember, we got a full day of trading tomorrow. Okay, full day of trading for New Year's Eve. Markets closed on Thursday, and then we're back on Friday. We jump into gold. All right, giving it back a little bit. And look at this. Gold's off $40 from where we were at 8 in the morning. You know, we're going to have some volatility, folks, coming into 2026. I think this is just a glimpse of what's coming down the line. The 10-year negative by 5 ticks. We got a yield of about 4.12, and you jump over the dollar DXY, 98.14. All right, folks, thanks so much for tuning in. Stay tuned. We got a man, Basil Chapman. He's coming up next with the Tiger Technicians Hour. Steve Rhodes at 11 o'clock with the Trader's Edge. Fast Market at 12. Larry Pesavento at 1 o'clock, and I'll be back at 3 o'clock today, folks. Stay tuned. Basil Chapman with the Tiger Technicians Hour coming up next, folks. Thanks so much. Have a great Tuesday, everybody. We'll see you at 3 o'clock.